ANA company was established in 2010 and it is an investment holding with wholly owned subsidiary that involve third-party service that provide assembly, packaging and testing service of semiconductor ICS and electronic manufacturing service industry. ANA company currently have 5 wholly owned direct subsidiary which is in ABS Technology Sdn Bhd, SOSO Semiconductor Lab Sdn Bhd, Yuwa Integrated System Sdn Bhd, NASA Resort Kitek Sdn Bhd and Siswa Global Limited. And for your information, our financial statement ended on 31st December for every year. The vision and mission of our company is to deliver quality service and product to our customer, to treat staff, customer, our business and partners fairly, to deliver good returns for our shareholder, committed to corporate social responsibility deliverables and compliance to all regulatory and legal requirements. There are several services that we serve in our business, which is wafer sort, assembly, RF testing, especially when new electronic device were manufactured, process capability, our current product which is semiconductor and other service in fiber optics and optoelectronic manufacturing. Our company has operated in 3 countries which is Singapore, Brunei and Malaysia. After 5 years has been in the industry, our company received excellent manufacturing outsourcing support on WSD Product Award 2015. Due to our hard work in 2018, we received 2 rewards which are Best Supplier of the Year Ever Gold Award and Best CEO for Investor Relations of MIRA.
Next, for the management approach, there are 3 factors to be considered for having a summary reporting. The first factor is the nature of the business activities. This factor consists of 4 contents to be considered, which are nature of the product or services, nature of the production process, type or class of customers for the products or services, and method used to distribute the products or provide the services. Firstly, the nature of the product or services are electronic manufacturing services, outsourced semiconductor or assembly and test services, investment holding, technology, research and development, and support center and others. Secondly, the nature of the production process are batch production and mass production. For the batch production, electrical home appliances are produced in batches to be sent out to the respective distribution channels. On the other hand, for the mass production, different types of electronic and electrical components are produced in masses to be sent out to respective customers. Thirdly, the class of customers for NAA products or services are suppliers, regulators, local communities, and international customers. Last but not least, the method used by ANAA BERHAD to distribute their products or provide the services is selective distribution method. This means that our company has more than 1 intermediary and distributor, but not as many as the intensive distribution method. The electrical and electronic components are sold and sent to several companies. Then the components are used to produce the components' own products to be sold at shopping malls and other electrical appliance shops. On to the next factor, which is the existence of managers responsible for the activities. An operating segment will usually have a segment manager who is directly accountable and responsible for the segments, and they are to maintain regular contacts with the CODM in discussing the operating activities, financial results, forecasts, or plan for the segment. In our company, there are 5 managing directors who manage 5 different segments. Datuk Mustafa Kamal bin Tahun Sri Muhammad Daud is the managing director for the electronic manufacturing services, outsourced semiconductor or assembly and test services. Next, Datuk Sri Shahrul Khan bin Ahmad Khan manages the research and development segment of ANAA BERHAD. Datuk Sri Jamil bin Nasim is the managing director of ANAA BERHAD's investment holding. The technology segment is managed by Datuk Shamsuddin bin Kamaruzaman. Last but not least, Puan Sri Adila bintu Adam, who is the managing director of the support center and others segment. The last factor is the information presented to the board of directors BOD. The CODM shall review the operating results of both sets of the components and the financial information which is available on a regular basis. The board of directors for ANAA BERHAD has access to any information that they require and need. They have the unrestricted access to all of the company's information across all businesses ANAA BERHAD does.
Our company separate our segment based on product and service. This is because they have similar nature and operational characteristic. We monitor the units separately because it is easy to us to make decisions about resource allocation and to assess performance. Segment performance is evaluated based on operating profit or loss, which is measured differently from operating profit or loss in the consolidated financial statement. We have 5 segments. first segment is electronic manufacturing service, outsourced semiconductor, assembly, and test service. Second segment is investment holding. Third, technology. Fourth segment is research and development. And lastly, support center and others. The responsibility of the Chief of Decision Making or CODM is to review management segment reports, assess the performance of the various segment of entity, and decide on the allocation of resources to the various segment of the entity. Our Chief of Decision Making is Dato' NORHISHAM FATIHAH, who is the head of Group Chief Executive Officer.
Now we move on to the process to identify the reportable segment and non-reportable segment. According to Mfrs 8, an entity shall report separately information about each operating segment. This can be done after doing a quantitative threshold test, which is also called as the 10% test and the 75% test on all the operating segments. There are three tests under the 10% test, which are revenue basis, profit or loss basis, and the total assets basis. If the test outcome is equal or more than 10%, then the information relating to the operating segment are to be reported separately. ANAA BERHAD is using revenue basis in measuring its operating segment. Hence, the 10% test will be assessed based on its total reported revenue of the external and inter-segment sales. After the 10% test is met, 75% test will be conducted by ANAA BERHAD. The total external revenues for reportable segment will be divided over the total external revenues for all the operating segment, in which the test outcome must equal or exceed 75%.
For the segmental report, according to calculations shown by using 10% threshold test of revenue basis, there are 4 out of 5 reportable segments that have the outcome more than 10%, which consists of segment 1, 2, 3 and 4 of 42.25%, 27.95%, 10.83% and 13% respectively. Only segment 5 is below 10%, which is 5.96%. The result of 75% test indicates 89.32% of external revenue, which is greater than 75%. Therefore, no additional segment needed to be reported under 75% test. Operating segment 5 remains as non-reportable segment. All information related to segment 5 is shown as other segments column or others.
This is the new segmental report of ANA BERHAD that are measured using revenue basis. After the application of quantitative threshold tests of 10% and 75% tests, 4 reportable segments are identified as their combined revenue external and internal of all operating segments are exceeding 10%. These 4 reportable segments comprises of outsourced semiconductor assembly and test service, investment holding, technology and research and development with the percentage of 42.25%, 27.95%, 10.83% and 13% respectively. Support center and others, which contain 5.95% revenue of all operating segments, fail to meet the requirement of 10% threshold test. Thus, it is identified as non-reportable segment and put under all other segments.
Advantages of segment reporting. First, it gives transparency and better insights, which can better evaluate the sustainability and growth of a company and monitor performance of the management. If it's done properly, it keeps managers from hiding unprofitable ventures. Second, it gives improved context. It enables users of financial statements to predict the future profitability of an organization, particularly where segments are involved in diverse activities. It is designed to help investors better understand the business and its potential cash flow. Third, it can lower cost of capital. In theory, the risk for a company investment in equity that discloses complete information is lower than a company of investment in equity that withholds information. Next, it helps in investment and credit decisions, which enables the financial statement users to better analyze the uncertainties surrounding the timing and amount of expected cash flows. Last, equilibrium in share prices, where the segment disclosures would tend to adjust the prices of company shares according to information released. Disadvantages of segment reporting. First, it only emphasizes on the present, where it can place too much of a focus on short-term numbers. By breaking out the losses as a data point via segment reporting can lead to pressure to reduce those losses to enhance short-term earnings. Second, it can lead to data manipulation if the information is reported in the true management's eye style. This gives company leaders more discretion in how it determines how segments are constructed and what metrics are reported. Third, base of segmentation, were a division of a diversified company for segment reporting purposes. Every base of segmentation may create segments differently and has its own limitation and problem. Next, it may lead to allocation problem in business organization that has more than one product. The complexity where some of the joint costs can be apportioned on reasonable basis and some arbitrary basis. Last, in a diversified business entity which may have some inter-segment transactions, there are a few methods for inter-segment transfers which give indifferent operating results for reporting segment. The basis of preparation of the interim report of INARI AMERTRON BERHAD is quarterly, 3 months and 4th quarter. The financial report period is shorter than a full financial year, which is done quarterly, which is 3 months. As of the current quarterly report, it is related to the 4th quarter of the accounting period, which is from April 2021 to June 2021.
The accounting policy that currently used by INARI BERHAD can be looked from the perspective of its MFRS 116, Property, Plant and Equipment, and MFRS 102, Inventories. For property, plant and equipment, the company used cost model, which is cost less accumulated depreciation and accumulated impairment loss. The company measured its depreciation using straight line basis over its estimated useful life. The estimated useful life can be looked in the table below. As for company's inventory, it will be measured at comparison of its cost and net realizable value, whichever is lower. The cost of all inventories is determined on weighted average basis, while the net realizable value represents the estimated selling price less estimated cost of completion and any estimated necessary costs. These are the types of interim report prepared by INARI BERHAD. First, condensed consolidated statement of financial position. Second, condensed consolidated statement of profit or loss and other comprehensive income. Third, notes to condensed unaudited consolidated SOPL and OC. Fourth, condensed consolidated statement of change in equity. Lastly, condensed unaudited consolidated statement of cash flow.
Next, the period for the current and comparative of each statement prepared by the company. INARI BERHAD accounting period will end on 30th June every year. The current and comparative periods for each statement prepared by the company will be measured from 1st April 2021 to 30th June 2021, which is equivalent to the 4th interim quarter of INARI BERHAD. For the SOFP, the period is from 1st July 2020 to 30th June 2021, whereas the comparative period is from 1st July 2019 to 30th June 2020. For the SOPL 3-month ending, the period is from 1st April 2021 to 30th June 2021, with the comparative period from 1st April 2020 to 30th June 2020. The period is from 1st July 2020 to 30th June 2021 in compared to the period of 1st July 2019 to 30th June 2020. For the SOCI and SOCF, the periods are similar, which is from 1st July 2020 to 30th June 2021, where the comparative is from 1st July 2019 to 30th June 2020.
This is an extract of financial position as at 30 June 2021 before the adjustment. As we can see here, on 1st July 2020, INARI BERHAD motor vehicle is costing 1.194 million with its accumulated depreciation 987,000. And for inventory, INARI BERHAD had an opening balance of 157.527 million. First adjustment related to non-current asset. On 1st April 2021, INARI BERHAD decided to dispose one of its motor vehicles with a carry amount of 3,000 for a profit of 75,000. The motor vehicle was initially purchased at a cost of 350,000. On 30 June 2021, the company acquired a new motor vehicle at a cost of 400,000. The company depreciated all of its motor vehicles using a straight line basis over a 5-year estimated useful life and none in the year of the disposal. First, we need to eliminate the dispose of motor vehicle. The cost of 650,000 will be eliminated in motor vehicle account. The accumulated depreciation of the motor vehicle also need to be eliminated. The accumulated depreciation to be eliminated is cost 650,000 less carry amount 300,000. We will get 350,000. The second transaction is when the company acquire new motor vehicle. The cost of 400,000 had debited in motor vehicle account. Next, we need to depreciate the new motor vehicle. The depreciation of the motor is 80,000, which is 400,000, divided by 5 years estimated useful life. New carry amount on 30 June 2021 is 227,000, which is new total cost 944,000 less new total accumulated depreciation 717,000. Second adjustment is related to current asset. On 30 June 2021, the company had inventory of 325 million units at a cost per unit of RM1.50, which brings the total of 487.5 million. The net realizable value or NRV of the inventory is RM1.25 per unit. Every year, the price of inventory will change. Therefore, the value of inventory on 30 June 2021 should be recognized at net realizable value as it is lower compared to at cost. The new value of inventory is 406.25 million, which is RM1.25 multiplied by 325 million units. The loss of inventory, which is 81.25 million, will be recognized in statement of profit or loss.
Here is the extract of Statement of Financial Position as at 30th June 2021 after adjustment. To prepare the Statement of Financial Position, it is required to record at two periods, which are current interim reports and comparatives. Current interim report refers to the current quarter, while comparatives refers to the end of preceding complete financial year. At the end of immediately preceding financial year of 2020, current interim will be on 1st April 2021 until 30th June 2021. And comparative will be on 1st July 2019 until 30th June 2020.